The fact is, unlike gold, which is really hard to measure, which isn't really done in the physical markets, where the derivative markets dwarf it. Like, for example, nobody knows how much gold is in Fort Knox. Nobody knows how much gold is backing central banks. Bitcoin is an open transaction ledger and it's all public. So it is really easy to know. So if Bitcoin becomes, as Paul Tudor Jones famously said a few years ago, the fastest horse and becomes the global store of value, all of a sudden we have a real-time public transparent scorecard that measures the value of currencies that are backed by nothing like the dollar.
Under the guise of preventing another multi-billion-dollar collapse in the cryptocurrency industry, U.S. regulators, especially the Securities and Exchange Commission (SEC) and the Commodities Futures Trading Commission (CFTC), have launched attack after attack on various crypto-related firms over the past few months. From exchanges like Binance and Coinbase to lenders, crypto projects, and even prominent industry personalities like Binance Chief Executive Officer Changpeng Zhao, hardly anything or anyone has been spared in the regulatory crackdown aimed at curtailing the excesses of the cryptocurrency industry. Heads of regulatory bodies like the SEC's Gary Gensler have argued that the cryptocurrency industry leaves adequate room for fraudulent players to exploit investors in the United States. This argument is not new or unique to the cryptocurrency industry. Prominent industry figures like Michael Saylor have described the cryptocurrency industry as the Wild West in terms of the number of unregulated and centralized exchanges that have been allowed to operate. Saylor and other industry leaders have in fact been urging regulators to provide some much-needed regulatory clarity so the industry can drop the fraudulent players and grow healthily. This is a far cry from what the SEC and other regulators are doing now. They seem so fixated on the collapses, which again are not unique to the cryptocurrency industry. An example is the ongoing banking crisis, yet regulators are not fighting tooth and nail to discredit the banking sector, despite its many, many flaws. So it's certain that there's more to the crypto crackdown. According to Dave Weisberger, the chief executive officer of CoinRoutes, governments around the world are threatened by Bitcoin and the crypto industry because of the demystification the blockchain brings to finance. Weisberger says the U.S. government is especially threatened because Bitcoin is the only asset that can truly challenge the dollar's dominance as the world's reserve currency. The CoinRoutes CEO recently appeared on David Lim's YouTube channel, where he discussed everything from the unwarranted regulatory crackdown to factors that would spur more widespread adoption of the world's leading cryptocurrency. Before we listen to the rest of the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks and enjoy the video.
It doesn't threaten anything right now. In the long run, it will. So if you looked at Alan Greenspan over his years, he always passionately looked to see what the price of gold was, because gold was the original, for thousands of years, the benchmark upon which all currencies were measured. And there are lots of people who will say that gold is actively manipulated down. We could talk about it, but at the end of the day, it still is something that's a benchmark for what people would call monetary inflation. So if Bitcoin grows into that digital gold valuation, then it will make it hard to print money without seeing the consequence of that monetary printing. That's what I mean by that. Right now, Bitcoin is well short of that. It would have to rise by a factor of 20 to be at that level. But there are people who believe that this is a possibility, and I think that motivates a lot of what's going on politically. There are those who want to kill it, quote, in its cradle, in order to stop Bitcoin from growing up and becoming that global store of value. That's the to be that scorecard, which will make monetary printing harder.
You've mentioned it's a direct threat on their ability to print money. Why would they allow that to happen?
Well, because it's gradual. It really is. It's really quite a gradual thing. If Bitcoin rallied all the way to 500,000 plus, it would still be slightly less market cap than gold. Gold has yet to demonstrate any ability to put a brake on monetary printing. So right now, Bitcoin is more of a curiosity for most of the people who are concerned. I think that you will see if it rises too high, at that point, there will be those who want to squash it. The issue is there critical mass? And the issue is it done in a incremental enough fashion to coexist until eventually it becomes the ability for people to opt out? And like Michael Saylor, I think that incremental likelihood is far more likely to happen. I don't think you're going to get a moonshot Bitcoin going to 500,000 and then the next year going to 5 million in order to replace all global currencies and getting to a Bitcoin standard. I think that it happens from the periphery in. So countries, we've seen El Salvador, very important news this week. El Salvador's bond rating being raised back, basically saying that when the rating agencies cut their bond rating because they adopted Bitcoin as legal tender, that's now been reversed. That's kind of a big deal. If you see more countries on the global periphery, not G7 basically, adopting Bitcoin as legal tender or embracing Bitcoin instead of dollar pegging, I think that you'll start to see that become a bigger trend over the next 5 years. And that's kind of the point. So if you're a policymaker in the US, do you really fear something that is going to happen when you're no longer in the job? And I think that's how they're looking at it.
Just like what's happening with the cryptocurrency industry today, El Salvador faced a lot of backlash from the West after it adopted Bitcoin as a legal tender. Last year, the International Monetary Fund, IMF, published several reports on the risks of adopting Bitcoin as a legal tender, advising the Central American country to reverse the decision. But El Salvador is now reaping the advantages of standing by that decision. A similar thing occurred with Michael Saylor's MicroStrategy after it started loading up on Bitcoin in August 2020. The firm's stock is up by over 125% year to date. Let's get back to the interview as Weisberger discusses another consequence of the continued crypto crackdown, how it's impacting banks and other financial institutions from loading up on Bitcoin.
Regulatory pressure. I think that they don't believe they can without, if you're Citigroup, you're regulated. I mean, MicroStrategies is regulated by, I guess, the FTC or whatever. But if you're a big money center bank, you're regulated by the Federal Reserve, by the Office of the Comptroller of the Currency, by the SEC, by the CFTC, by the FTC. You also have the Treasury Department looking over what you're doing because you're a too big to fail institution. These people have enormous regulatory, compliance issues. And so the idea that they would ever invest in crypto on their balance sheet when we just saw and are seeing banks, for example, just the ability to have deposits from crypto holders, from crypto exchanges is considered to be risky. And the various regulators have said this. They call that risky. Directly owning it is definitely off the table right now. Now, will that be the case forever? Absolutely not. Is that the case today? Absolutely true. Is it the case in other countries? Well, that's an interesting question. I think you may very well see it as a treasury asset in the next 2 to 5 years, but it's going to start elsewhere. It will not start in the United States. I mean, treasury is for companies that are a bank where it will depend. The most important thing when banks look at treasury is capital requirements. So, for example, if you have treasury bonds, you take almost no haircut. That is considered good collateral for everything that you do. If you buy real estate, that is haircut dramatically. If you buy crypto today, it's haircut almost 100%. You almost get no value for it. So as long as the capital requirements as what's good collateral are the way they are, it's not even part of the conversation. Now, that's not true if you're an asset manager and you're recommending portfolios to your clients where you've recommended historically 5% in precious metals or something like that in what's called the 60-40 portfolio, whatever the nuance between bond and equity weights and precious metal weights and alternative investment weight. Bitcoin has yet to enter that conversation in a meaningful sense. And there's a lot of money there. That is where I expect to see it entering the conversation more and more. And it already is in countries outside the US. And it's starting to gain some traction in the US. But that's far more than what a bank can do, because banks will be the last place. And that's because of capital rules. Reason is because there are many conspiracy theorists out there that believe that what is actually happening from the US regulators is they are looking to try to shut down those businesses or make them scrap, such that the banks could then come in, which they have a tighter relationship with, and actually build back that sector. That is what the conspiracy theorists say. I'm not so certain that that's what they're trying to do. I think it's much more about jurisdiction. And I think that most of the really regulatory issues that we have today is basically a jurisdictional food fight between the SEC and CFTC and state regulators and federal regulators. And you see lots of me. It's almost like children playing on the playground is how our regulators are effectively approaching this. And I think the knock-on effect of that has been potentially to move in the other direction. The banks, just to go back to the banks, as you mentioned, yes, I had many years sitting as a managing director on Wall Street. The banks will go where they think they can make money, period. So they will always try. So you saw in 2017, when Bitcoin first started to rally, all the banks started up efforts to investigate crypto. And then when 2018 crypto winter set in, they shuttered or mostly shuttered those businesses and those efforts. And today, over the last few years, those efforts exist. I mean, pretty much every bank has some investments at least, and has something going on in the digital realm, because they don't want to be knocked out of that realm. But those somethings are definitely less than they would be if it wasn't for the regulatory uncertainty in the US.
According to recent reports, U.S. lawmakers are working on having comprehensive regulation for the cryptocurrency industry at the latest in 2 months. After the excessive red tapeism of the past year, this is great news for crypto investors and builders in the United States. If the bill is passed and the regulatory crackdown is somehow curtailed, the industry might be able to successfully reverse the effects of their past actions on the industry's growth in the United States. What are your thoughts on Weisberger's interview? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos to stay sufficiently updated on important market trends. Thanks for watching.